This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. More knowledge, more wealth on AM 590, The Answer. Now here's your host, Gabriel Shahin.
Good afternoon. You're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. Our goal is to give you the knowledge you need to increase your wealth. You can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Just give us a call at 855-963-2526. That's 855-96-FALCON. Like the bird, to help relate this show to your specific situation. Now, I'm a principal of Falcon Wealth Planning. We are a registered investment advisory firm, folks. We are fee only, not fee based, but fee only, non-commission, true fiduciary advisors, folks. And we handle anything that involves a dollar sign. So if there's anything we can help with, give us a call. We are offering a free financial assessment where we'll help relate this show to your specific situation, where we go over everything that involves a dollar sign, where you are today, how retirement looks like, talk about taxes, investments, estate planning, insurance, folks, you name it, anything that involves a dollar sign, we can help. Give us a call. We have offices all across California, including other states, and we service people all across the country. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We'd be happy to help. Folks, there is a lot going on in the markets today, and it's really not going to stop. And there's always a lot going on. Why? Because it's fluid. It's human nature. It doesn't matter what's going on with our situation, because even if we're stable, the government may be unstable. And even if the government is some sense of stability, where businesses may have fluctuation, whether that is in policy that has changed, whether it's getting their goods overseas, have increased in costs, whether it's due to shipping, whether it's due to manufacturing, whether it's due to oil prices, whatever the case is, there's always something that affects what's happening today and tomorrow. And the important part of that, of course, is what happens, what we hear today has a trickling effect on what happens in the future. This is why it's extremely crucial to take a look at your overall situation to make sure you're hedged, just like your business. Your business may have some competition. Your business may be affected by certain exposures to your biggest clients, to your biggest person that you're buying your goods from, whatever it is. Even if you're service-based, there could be some slowdown in your product or your service that you're using, whether it's technology or so on, that can really put a detriment on your business. With that, you have safeguards, right? That's why you have antivirus systems. That's why you have backups to your service providers, is so you can always operate as normal. Well, this is something that you also have to do with your finances. Everything is great until it's not. Your Amazon was doing amazing until it's down 40%. And same thing with your Apple, and same thing with your Tesla. What's my point is, you cannot bank your whole business, your career, whatever it is, on just one thing, on one person. This is why diversification is the key. It's diversification in your finances, diversification in your life, you name it. That's why we take our spouses out on their birthdays to make them happy and celebrate anniversaries. And the same with our kids. Life is balanced in that regard. But we don't do it to ourselves on our personal financial situation. It's crazy and it's unfortunate, but it's the reality. So I heavily recommend that you understand every outside factor that can affect you, that can hurt you. I mean, the feds right now are talking about trying to reduce the inflation. With that being said, they're raising rates coming up. Well, that's weird. That almost seems contradictory. Aren't they the same? They're not the same. Some people think they are. This is why it's important, yet again, to analyze your situation, to see if your portfolio is built accurately, comfortably, where it could withstand whatever the market volatility is. Market's going to go up and they're going to go down. What are you going to do about it? Truly, what are you going to do? It's not uncommon from what we're about to see. And sadly, people don't like talking to a professional or getting advice at a time like this. Why? Because they're embarrassed of what they've done. Do not be embarrassed with your finances. Who cares? If there's a professional that judges you, they're not the right people for the job. And who cares? Just don't do it with somebody you know. Don't do it at somebody at your local religious organization, right? Because you have to see them every week. So do it with someone who doesn't know you, with unvested interest, will give you advice, whether respectfully you like it or not, but at least they should help you. We have never met a client, a prospect, where we couldn't help. At least, whether they work with us or not, we tell them the things that they should be doing. That is crucial. It's like people complaining about not being muscular. Like if you're younger, working out at the gym, I'm embarrassed to work out because I'm not strong. Well, you need to work out to get strong. You have to start somewhere. By the way, folks, if you're just joining us, you're listening to Gabriel Shahin, certified financial planner, your host of More Knowledge, More Wealth, here on every weekend, talking about all important topics of personal finance. And today I'm talking about your situation and all the variables going on in the markets right now. Everything that's happening. I mean, here you can even throw in a wrinkle with like China and Taiwan. And some argue China's main interest in Taiwan is for the microchip with Taiwan semiconductors. I mean, there are so many different things and that can affect Apple. That can affect cell phone production. That can affect computers. That can affect a lot of different things, as they're one of the largest producers of that. What's my point of all this? There is no way that we're going to know this, or you're going to know this, or any one person can know all this that's going on. You have to stay on top of it. And if you finally are on top of it, there's probably 15 other things that you have to relearn. By the time you learn those, there's probably 30 more things that affect what you're currently doing. From your job point of view or an investment point of view, you have to look at what you're currently doing and see if it's sustainable for the ever-changing environment. You truly do. Because you can look at gas prices that are up a ridiculous amount over the past 2 years. For the past month, it's down 25 to 30%. You know what I mean? And now what's coming out? Bandwagoners. What do I mean by that? People are coming out with master limited partnership MLPs saying they can make you 10 to 20% on these type of oil deals. And I see them all the time. I had a client send me something they found on Facebook that said, this is the time to go into oil exploration. Are you kidding me? You know when the right time was? Before it got hot. You know, there's a saying. I've had the luxury of being on the floor of the stock exchange, actually going to the closing ceremony in 2022, earlier this year. And there was a saying, and this happened when I was in 2008, when I was there, same thing. In October, during the crisis, might I add. And when the shoe shiner starts talking about the hot stock, it's probably the time to get out of it. When the shoe shiner is talking about how they want to get into Amazon or Tesla, you probably should get out of it by then. So all these things are coming out of the woodworks of oil and gas, but you're not safe there yet, right? Forget the 30% drop that just happened this month. Forget all, or I should say the past 30 days. Forget that. Let's talk about insurance products that are not coming out. They love market drops because they say, look at your $1 million portfolio. Now it's down to $700,000. If you would have put it into, and they have all these crazy names for them, compounding interest account, guarantee making money account, no lose, only win account. I mean, they have these stupid names for them, trying to just confuse you to make a wrong decision so they can theoretically, I mean, metaphorically speaking, steal your money. I mean, I'm not allowed to say that because they don't steal your money, but they put you on a product that you can't get out of without heavy surrender fees, and you don't even know what's going in. They show you these illustrations that are, you can't lose, you can only make, and you're going to make all this money, take it out tax-free. But you know what they're not sharing you? The cost of insurance. You know what they're not sharing you? When you take out your own money and having to pay interest on it. You know what they don't show you for those that really think they can make a lot of money? They're not showing you that you're borrowing to buy more of the insurance. I can't believe these people are even out there saying these things can outperform a normal stock market and investment and Roth IRAs and saying it's better than everything. I mean, this is absolute bogus. How the SEC, Securities Exchange Commission, allows these people to continue to talk blows my mind. It's truly a leveraged index universal life insurance, and it doesn't work the way they advertise it. You should say, show me somebody that's been in it for 10 to 20 years. They don't exist because it's garbage. In addition to that, they'll be, oh, well, this is new. fancy. This IRA, this new tax code. No, it's not a new tax code. It's you can borrow off your cash value of your policy tax free because you're borrowing back the money that you put into the thing. It's ridiculous, some of the sales techniques that come out. My point is, in every market cycle where there's an opportunity, like now, buying into this market sounds great to me. It seems to be on discount. If you liked it 6 months ago, you better like it today. Seems common sense to me, but people get freaked out by the news. They get freaked out by the insurance salespeople trying to make commissions off you by selling you annuities or fixed annuities or universal life insurance, index, whole life, permanent, all life insurance, which is designed to protect you only if you die. But these people are jamming it down your throat as an investment, which is dishonorable. It's outright unethical. And frankly, is against the investment industry. These people are insurance salesmen, not investment advisors, but they call themselves financial planners, financial advisors, vice president of nothing. And it's sad that you have to deal with this nonsense. We're over here trying to teach you, to protect you, to give you more control. But when you go into something like this, you're not protected. Yeah, you're protected if you die, but you don't need this for protection. If you die, you need it for retirement income. And that's not what these are. You compare it to any other retirement account that's out there, or investment account, and they're using marginable products. Would you have $1 million and borrow, take a line of credit off it for $500,000 to reinvest in it? I think not. They're doing the same thing to buy insurance premiums. That's how they're claiming they're juicing up the returns without giving you the fine print, of course. It's madness, guys. I cannot express to you how crazy this is. And I'm going to go over more detail of that and more things to be aware of when we come back. But if you need help, it sounds like something is pitching to you, or if you want a second opinion, give us a call. Our phone number is 855-963-2526. That's 855-96 Falcon, like the bird. Be happy to help to protect you of some of these people out here that are just truly trying to take advantage of you. Folks, we'll be right back after a few words. Welcome back, folks. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth, here on every weekend talking about all important topics of personal finance. And today we're talking about the markets and how there's always something going on, always something you have to change, always something you have to adjust. Oil and gas sounded great up until the past 30 days. It's down almost 30%. You get what I'm saying? Things are volatile. What seems great today may not seem great tomorrow. And this is why there's no substitute of analyzing your situation with a professional, or at the very least, taking a look at how concentrated, how diversified your portfolio is. Everything that's great today will not be great tomorrow. Now, tomorrow has an asterisk. Tomorrow could literally mean tomorrow, or it could mean next week, next month, next quarter, next year, next decade. What's hot today may be not hot tomorrow. So what does that mean for you? That means you have to consistently take a look at what's happening in the world and project of what the future changes will be, and the changes that are made, what impact that has on multiple industries. Most people don't care to do that. That's a lot of work. That's a big ask. And what benefit does it truly give? Because there are analysts out there that predict these things of what could change and make investment decisions based on that. The point is, the historical stock markets, with all these things that's already happened in the past, from the financial recession, from the dot-com bubble, from oil embargoes, from world wars, to get to where we are today, the stock market averages over a 10% rate of return. I'm not trying to say you're going to make 10% rate of return. That assumes you invest all your money in just the S&P 500. What I'm suggesting is that's the standard. And that assumes you're 100% invested and you don't have any money that's liquid, any money that's in bonds, any money that's in any other fixed income. So why do I go over this with you? Because you have to figure out how much risk you should take. You have to take a look of how much you need to sustain, maintain your lifestyle. You have to take a look at what you have in debts, what you have in future expenses, what you have in your current living style, which sometimes is the hardest question by itself, is how much do you spend? And take a look at future goals. These are the things that you have to do to make sure you have an accurate reading of how much is the rate of return that you need. And this is why we offer a free financial assessment. If nothing else, we can help you point that in the right direction. We do that on a daily basis. We consider all that type of pro bono work to be, in essence, an indirect form of marketing, because now you know somebody honest in this industry. You know somebody that you could trust. Maybe it's you. If you're not ready, somebody else may be ready. It's our way of casting a large net so you know one of the good guys in this space. We would love to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short. We would love to help you relate this show to your specific situation. I was talking earlier about insurance products and all these things that come out there in the woodworks when the markets drop. The worst ones are gold and silver, where they have all these late night infomercials and these internet things of 30 to 40, 50-minute presentations or conversations, and alludes to just buying gold and silver. Folks, it's unregulated gold and silver. Completely unregulated. There's no commission on the way in, or unregulated commission on the way in, I should say. So there is a commission on the way in, and there's unregulated commission on the way out. I'd rather just buy gold ETFs, unless you truly want the bullion. If that's the case, go to your downtown. They'll probably charge you 5 to 10% on the way in and 5 to 10% on the way out. It's better than being charged 50% on the way in and 50% on the way out. You'd have to get 4x on your money, 400% return just to break even. We've seen clients do that, which is why they're clients of us now. They got taken advantage of. People on the radio selling this junk. Be careful. That's the first terrible thing. Second terrible thing is these insurance products. People are trying to sell you that you can't lose. Think about it. If it sounds too good to be true, you heard the saying, finish it off for me, will you? Right? Ready? It's too good to be true. So to say that you'll get 7 to 10% returns and it's impossible to lose money is bogus. It's fraud, in my opinion. They are misrepresenting it to you. That's lying. That's how I interpret misrepresentation. It's a lie. And maybe the person selling to you is just reiterating what the wholesaler told them, from the insurance companies. It's unfortunate that you have to go through this. It's unfortunate that you have to hear this, but this is just how it works. You have to be careful of what people are saying and how people are acting. It is not right that your hard work savings, somebody's able to take it and snap, which is why there's no shortage of getting a second opinion. And I don't care if these people are at your local banks. Oh, well, I've been banking at Bank of America for 30 years and with Chase and Wells Fargo. It doesn't matter. They're investment arm. They are commission-based. They only get paid when you buy something. They don't get a salary from these places. You might say, oh, yes, I do. Well, you're probably dealing with somebody that is like a premier banker or something. Then they'll refer you over to somebody that's commission-based. No matter what, they're commission-based. You're paying the bank, you're paying the advisor, and you're paying the product, the actual product you're buying. 3 people get paid. This industry is tricky. You just have to be careful. That's all I'm saying. By the way, folks, if you're just joining us, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here, and every weekend talking about all important topics of personal finance. And today, I just want you to be careful of what's out there, because some of these products you buy into, you lose control because it's irrevocable decisions. You'll lose 10 to 20% of what you put in. Why? Because you just have to pay the commission to the guy who sold it to you. Be careful, please. There should be no reason you put your money in something today and it drops in value right away, or you can't take it out the very next day. No reason. Why is it cost money when you want to get out? Because of the commissions you pay. So whatever they say to you is a lie. They say you don't get paid. Great. I can get in today. I can get out tomorrow. The answer better be yes. It better be yes. Fortunately, it's not for a lot of people. So be careful, okay? Versus going into a global index market. And there are large caps like the S&P 500 and NASDAQs of the world. There's mid caps. There's small caps like the Russell 2000. Then you have international, which is like emerging markets and developed markets. And then, yeah, some people do have exposure in oil and gas or real estate. That's fine. The point of these asset classes are uncorrelated. or differently correlated. And this is a way to protect your portfolio, because when some, like now, US market's going down, not every index has dropped. Some indexes has gone up in value. On the same day, every single day, some will go up, some will go down. Their year-to-date return numbers, their 1 year, 5 year, 10-year return numbers are completely different. Over time, they all make money. It's very rare over a 10-year period there is not some index that doesn't make money. It's rare, very rare. My point is building a proper portfolio can avoid all this mumbo jumbo that they're going to try to sell you. If you build it right through indexes, it's cheap, it's easy, it's liquid, and it makes money over long term. Granted, there's no guarantee in anything, right? Any guarantee that you'll make money in 10 years is a felony. It's not allowed, it's disallowed. The point is, put your money in something that's logical. This is what institutions are doing that have to pay pensions, pension funds, endowments, corporations, foundations. This is what they're doing. I'm not trying to say be a bandwagoner, but this is the most logical approach. If we believe in capitalism, that businesses are in business to make money, to sell, to employ, then of course, the stock market does go up. As we know, there's volatility before it gets to that glory end. And that glory end, you don't know when that is. Because you're never going to fully need everything. I mean, it's possible you may need the majority of it, maybe in 5 years from now, 10 years, or you feel it's going to be liquidated in 10, that's fine. It should be managed accordingly. And for you, you just have to be able to identify your portfolio. What is the right thing and what is the wrong thing? Don't be sold. Do what makes sense. Do what's logical. Do not chase the get rich quick scheme. Look how Bitcoin worked out. Look how non-fungible tokens, NFTs worked out. Everything is great until it's not. And you heard of all the frenzies that happened in the past, from the, tulip frenzy that happened hundreds of years ago to other things more recent. It's not the first time we've seen this movie. So just be careful is all I'm saying. Don't pay attention to things that sound too good to be true. It's as simple as that, folks. We've seen this all far too often. And if you need help with this, if this is something that you feel like you fell victim of, don't be embarrassed by it. Seek a professional who does this on a daily basis. That's helped thousands of people on an annual basis, of new people on an annual basis. Because we've seen this before. The ones that laugh are the ones that have no experience in it. It's the ones that haven't seen the sheer volume that we have. We have helped thousands of people every single year. We want you to be one of those people. Give us a call. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short. Folks, that was a fast show. I want to thank you for tuning in with us this weekend. Feel free to give us a call at any time or visit our website at 855-963-2526. That's 855-96-FALCON, like the bird, or our website's falconwealthplanning.com. That's Falcon, WP.com for short. Well, we'll help relate this show to your specific situation. Call us. We'll have a confidential conversation of your situation to really just help out answer the questions that you may have. Tune in with us every weekend. We're on podcasts and we are on Spotify, where we can make sure that you listen to this commercial free as well. I want to thank you for listening. We want you to have a great weekend, have a great week, and God bless.